Hello again, everybody. This is Dr. Richard Smith here on Cycles TV with the Foundation for the Study of Cycles. Good to be with you again today, and I hope your year is going well. It has been adventurous already, hasn't it? Markets volatile, one of the things that we anticipated. And so today I wanted to take a look at the dollar, the US dollar in particular. And is it King dollar or is it King Kong dollar? So I think so much hinges on the US dollar right now. And it's very important to keep an eye on it, a close eye on it, obviously connected with interest rates and bonds, treasuries. A strong dollar is the official policy, according to our new Treasury Secretary, Scott Bessent. But a too strong dollar is obviously going to be a problem. So let's see what the cycles have to say about the state of the US dollar and its related financial colleagues. But before that, I just wanted to revisit our show from a couple of weeks ago on copper because, wow, check this out. Let's see. All right, that's not it. So here is the cycle that we looked at 2 weeks ago on January 28th. I said it doesn't get much better than this. This is the 158 period cycle on copper futures on 4-hour data. Okay. So when you see a cycle like this, pay attention. And we were right here on January 28th when we were last together. And this cycle worked to perfection. This move here from 420 at about the bottom of the cycle up to 470, a 50 cents move in copper. Incredible. So nice outcome from our last time together. And just checking back in on the daily cycles in copper. We know the weekly cycles in copper have topped just like all the other cycles in equities, right? But daily cycles still looking like it's got a little more room to run, maybe a week or two. And the 4-hour cycle definitely stretched. I mean, you can't really ask for more than that, but there is still a little bit of time left in this up phase of the cycle as well. So always like to revisit what we did the last time, and this was a good outcome. So that's an incredible cycle. Pay attention to that one. Keep an eye on it. When we find others like that, we'll let you know. All right, so moving on to the dollar. Take a look at our usual preambles, one being the sentiment from the commercial traders, the commitment of traders. So we can see here that the commercials have been, they're not short the dollar. They're below the zero line here, but we're definitely accumulating dollars overall, or, not short as many dollars. So I would say this is mildly bullish for the dollar. Commitment of traders can take months and even years to really fully reveal it's the outcomes that are being hinted at. So I'd say this bodes for a stronger dollar over the next year. Meanwhile, small traders are getting pretty frothy. Okay, they're not quite up to 80 yet, but definitely in the neighborhood. And that is a caution signal in the short term. Seasonality wise, we got some strong dollar seasonality in months 1, 2, 3, January, February, March, right? April, some is one of the more bearish months, but 1, 2, 3, and 5 are all in the top months of seasonality. And we can see that also here in the weekly seasonal futures charts from seasonaltrader.com. Thank you, Jake Bernstein. Some bullishness into March, some bearishness into April, and bullishness in May. So just reiterating here, we got commercials accumulating, longer term strength. We got small trader getting a little bit frothy, shorter term weakness. We do have some bullish seasonality in the dollar, some tailwinds, I would say. Where are we now? We're about here, so we could see a little short-term pullback with some renewed strength. And I guess this might be getting a little bit ahead of where I want to ultimately go today, but since it's here in the PowerPoint, I'm going to cover it now. This is just showing correlations of the dollar DX here with other assets. Okay, these are equities, ES, NQ, YM, and RTY. These are bonds, 2s, 5s, 10s, and 30s, precious metals, Bitcoin and Ethereum, energy, the dollar, and the euro and the yen. So we can see on the 1 hour correlations, a lot of negative correlation with equities and shorter term treasuries. Less negative correlation, but still negative on longer term treasuries and metals, Bitcoin, Ethereum, etc. Positive with energy. Interesting. If we look at the 4 hour correlations, pretty neutral. This surprised me. But if we get back to the daily correlations, and you're looking at correlations on daily data going back 250 bars, again, negative with the equities, negative with bonds, metals. So the dollar is really negatively correlated to a lot of things. So also something to keep in mind. All right, let's now get back to the cycles. Yeah, okay. All right, so we're starting out here. I'm looking at the dollar index from Yahoo Finance, dx-y.nyb-w for weekly Yahoo Finance. And we see here, we've got the 177 cycle, very clear on the spectrum, right? And then also this 87 cycle. So why do we like these so much? One, a lot of definition on the spectrum, steep sides, sharp peaks. It would hurt if you sat on them. Strong Bartels. I mean, really, cycles don't get a whole lot better than this. Number 1 and number 2, strength, right? Strength telling us the most bang for the buck, so to speak. In terms of, you know, the level of price move that you get during those cycle phases. So we got 2 very strong cycles here on the weekly data. Let's see. This page is unresponsive for some reason. I'll try refreshing it, and give me just a second here. No, thank you, Google. All right. So I'm going to try to refresh this one while Also, oops, okay. Just a moment. All right, we'll let that reload. All right, and then here on the futures contracts on the dollar, so very similar, 175 and 88. We already knew this, but bullish from the weekly cycles, at least into later this year. Okay. So we know that the weekly cycles in the dollar suggest more dollar strength by the end of the year. Yeah. So here we are back here. Same thing. And turning on the cyclic RSI, that's what I wanted to do. Okay. So clear that there's dollar strength into the summer and the fall from the cycles. There's other reasons that the dollar might go down, but the weekly cycles aren't one of them. All right, moving now to the daily cycles. So again, this is the dollar index from Yahoo Finance. And on the daily cycles, we've got really one cycle that kind of sticks out better than the rest. This 143, suggesting that we've seen a short-term top in the dollar and could well get some correction in the dollar for the rest of February and maybe even into mid-March. Got a nice cyclic RSI sell signal here from being way up above the bands and coming back in. So on the daily cycles, we're seeing some suggestions of dollar weakness over the short term. Just confirming that here with the futures data, DX equals F. These are very similar. So 142 here. So we see on the daily data some signs of caution. You know, this longer term cycle here. That's going to slow down. But I think this cyclic RSI sell signal here on the 142 day cycle is something to pay attention to. All right, so moving down now into some shorter time frames. This is the 4-hour data on the dollar. And we got some nice cycles here, in particular, this 162. Number one cycle, number one strength. Number one Bartels at 92. And clearly stands out on the spectrum. Not as great as the 4-hour copper cycle, but let's go back to that for just a second. That was 158. So we see here on the 4-hour dollar cycle, 162. That's interesting. I mean, that's nearly the same. That's pretty much the same length cycle, right? So we got that coming up, nearing a top, but momentum kind of on our side. Even got a momentum buy signal with a little couple days left in the 4-hour cycle on the dollar. So this is very short term, the 30-minute data. Some pretty good cycles here, bad momentum. So going across the time frames, one more look here. We got strength on the weekly. We got weakness on the daily. A little bit of strength left with some really nice cycles on the 4-hour. And a little bit of strength left from the shorter term cycles down on the 30-minute level. So we could see a little lift in the dollar. The inflation numbers come out tomorrow and Thursday, the PPI and the CPI. Maybe there's a little pop in the dollar. But the daily cycles are pretty clear that we could see some weakness overall for the next few weeks until getting some strength into the middle to end of the year from the weekly cycles. Okay, so that's the picture from cycles. If you've got questions, please put them in the chat. I'm going to get to them in a minute. But again, I think it's very important to keep track of what's happening with the dollar, because I think a lot of things are going to depend on ultimately where the dollar goes. Going back to our little correlation picture here, we can see how negatively correlated, especially if you're a trader, equities are. So if the dollar's going up, odds are equities are going down. Right? Interestingly, Bitcoin and Ethereum, not that correlated on the higher term time frames to the dollar. But definitely, if you're trading on a short-term basis, or if you're looking at daily prices, you want to be paying attention to how negatively correlated the dollar is to all kinds of other assets, especially equities and bonds. All right, so a couple more things here. You may find this of interest. So I asked ChatGPT, I'd like to improve my understanding of the role that the US dollar plays in the global and domestic economy. Please take on the role of a college freshman economics teacher who's also a trader. My first question is, what are the most important things to understand about the role that the US dollar plays in the global economy and in financial markets? Pretty good resource here to just get a general idea of how the dollar is understood in the global economy and in financial markets. Obviously, its role as the reserve currency, safe haven asset. It's another big role of the dollar. Dollar denominated debt. This is important. Many countries and corporations borrow in the US dollar, and a strong dollar makes these debts harder to repay, which can lead to global financial instability, right? So these tariff talks threatening other countries that already have high levels of debt and carry that debt in dollar denominated debt. If we have a strong dollar up, that's going to be tough on the emerging market, on emerging markets, for example. So dollar denominated debt is a very important thing to be paying attention to. What are the best predictors of whether or not the US dollar will rise or fall in value? Well, interest rates and Federal Reserve policy, right? So higher US interest rates attract foreign capital, increasing demand for the dollar. So if inflation looks a little less than benign, less than sanguine, we could see the dollar rise a bit. So that's a big one. And I find these tools very useful and wanted to just share with you how I'm using them. Are there any well-established leading indicators of dollar strength? M2 money supply. The biggest one being interest rate differentials, right? So what is the yield in the US versus, say, the yield in Japan? So I actually went and looked at that. So this is the spread between 10-year yields in Japan and 10-year yields in the US. And this is back in 2020. Okay. And this is the spread today, minus 320. So it went from minus 54, which means that the US 10-year Treasury was only yielding 54 basis points, about 0.5% more than the Japanese 10-year. But today, the US 10-year is yielding 320 basis, or 3.2% more than the Japanese yen. Now, this has been going up, right? So the US, either the yen yields, the Japanese yields have been gaining on the US, or the US has been going down more. Not sure which one. But overall, we see that the US 10-year yields have been gaining on Japan. We're getting further away. Going back the past 4 years, right? Even though since October, I guess, maybe since we thought Trump was going to get elected, those yields in the US have been getting a little closer to Japan. So they bottomed at 408 basis points, 4.1% difference. So higher yields in the US mean more attractive to investors, which means, higher dollar. So if we see this going up, that should relieve some pressure on the dollar. So just another thing to keep an eye on that I don't think many people pay attention to. This is from worldgovernmentbonds.com. Great little resource here. You can go to spread. You can look at the spread of the USA on the 10 years versus other ones. Here's Japan. Click on it. And go down to the interactive chart. Have a look. So good thing to pay attention to. And then lastly, here's the yen on a daily basis. So cycles pointing up. And on the short term, the 4-hour cycles pointing down. And same on the hourly as well. So all these things are interacting. Ultimately, though, we don't want the dollar to be too strong because it creates all kinds of havoc, especially in the rest of the world. And we do need to all get along, at least enough to keep the global economy still functioning. So that's what the cycles are saying. Let me pause here for a minute and see what's on your mind. All right, Bruno, since August 5th. Not sure what you're saying there. Since August 5th. Maybe that was the bottom in the yields spreads between the yen and the dollar. We can go back and take a look at the chart in a minute. All right, anybody got any questions about all that? So why do we care about the dollar strength? Because it's negatively correlated to equities and bonds. So if we see the dollar soaring, it's going to create a lot of problems for equities and bonds. It's going to create problems for global liquidity. And it's going to create problems in emerging markets. So we do want a strong dollar, but we don't want it to be too strong, or else it risks really impacting some of the other things going on in markets and in the global economy. So that's really what I got today. If anybody's got any questions about it, I'd be happy to take your questions. If not, I hope this has been useful information to you. Hope we learned a little bit about cycles analysis and how to do cycles analysis. Also, how to use some of these AI tools. By the way, I did also use DeepSeek. Let me just show you this. This is DeepSeek. So I'm actually running this on my computer. I gave it the same questions that I gave to ChatGPT. I'd like to improve my understanding of the role that the US dollar plays in the global and domestic economy. Exact same question. So this is just running on my Mac, okay? It's like 5 gigabytes, and it's not going out and querying the internet to get these answers. It's all contained within the installation on my computer. And the responses, I didn't find them as impactful, as easy to understand as the ChatGPT responses, but still pretty darn good. Reserve currency, fiat currency, global reserve currency. Interestingly, went into like Bretton Woods and the gold standard versus modern fiat. Overall, I felt it was a little more critical of the dollar than the response I got from ChatGPT. What are the best predictors of whether the dollar will rise or fall? Interest rates. Okay, so good. It's good stuff. And this is free. So this is in LM Studio. I downloaded it, downloaded DeepSeek, sorry. And yeah, so I find these tools helpful when I want to think about something, when I want to look into something. Yes, cycles can take us, a certain distance down the road. But we have to also understand cycles in the context of what else is going on. What are the other dynamics at work? What do we need to be paying attention to? And we can get more insights when we put all of these pieces together. So use AI, try to get a basic understanding of economics, of markets, of dynamics. Look at the cycles, look at the interest rates, look at the money supply. And through all that, we can start to get our own clear picture of what's at work and how we can improve, our ability to follow what's going on and to respond accordingly. All right. Love the DeepSeek and AI testing. Yeah, I mean, this stuff is incredible. It's basically free to use, and you really should be using it to not only to complement your use of the cycles technology, our use of the cycles technology. Cycles are not a silver bullet. They're not a standalone tool. They're to be used in conjunction with other tools. And I think that the knowledge that's available through these large language models and generative AI can be a big help in getting a basic picture of what's going on in the markets. So overall, I see maybe a day or two of dollar strength, followed by some dollar weakness, followed by some longer term dollar strength. That lines up overall with my sense that we could get a rally in equities and even in bonds, especially if we get a sell-off in the dollar over the next couple of weeks. But longer term, I think Trump's going to have to wrestle with the strength of the US dollar, and he needs to be careful to not let it get too strong, or else it's really going to upend his plans for a thriving domestic economy and for what I'm sure he would like to see, a soaring stock market. So leave it at that. Thank you for joining us. We are the Foundation for the Study of Cycles. If you're not a member, please consider joining. Please like our YouTube channel and tell your friends about it and family. And be careful out there. Volatility is likely to continue to be a factor in the markets. There's a lot of uncertainty in the markets right now, period. And in the midst of that uncertainty, it's easy to get big moves that ultimately go nowhere, but can wreak havoc in your trading and investing. So be careful out there. Keep an eye on the cycles, and I'll see you next week. Bye-bye, everyone.